Dan, 4 dispensaries were acquired by Ascend Wellness earlier this year. What was it about those dispensaries that made them attractive purchases?
Yeah, so we announced the acquisition of 4 dispensaries in Maryland in January. We are still awaiting regulatory approval. Those dispensaries, I think, were particularly attractive because we saw the flip to AU in Maryland coming. So we were able to enter a late-stage medical market at what we believe to be an attractive price of $19 million. It was comprised of $12 million of cash and $7 million of stock. It was right around 1 times revenue and accretive on an EBITDA basis on medical run rate sales. And we believe it'll be highly accretive once the market flips to adult use. So it was a combination of the timing being right, the price being right, and assets that could quickly flip to an adult use market.
And Dan, what trends do you sort of anticipate unfolding the rest of this year? I know it was tough last year. A lot of folks here have been telling me it's going to be tough this year. What's your impression?
Yeah, I think unfortunately the weather in Miami these past couple of days, it's been very rainy and windy. I think that's a foreshadowing of probably the cannabis industry in 2023. Capital has really dried up across the debt, sale-leaseback, equity market side of things. So capital availability is tight. This is a capital-intensive industry, so that's generally not a good combination. And I think as tough as it is out there for the public MSOs, if you take a click down to the private MSOs or single state operators that are out there, I think it's just as difficult, if not more difficult, on the capital raising side of things. So I think you'll continue to see a trend towards consolidation. Scale does matter in this industry, and bigger is better. And I think that'll be effectuated through a combination of folks coming to a realization that they either have maturity or debt profiles that need to be addressed, or folks that just have operated as a single state operator, family-run private company for a while, who realize that they need to consolidate, they need to hook on to a larger horse to kind of make it through to the other side here.
And Dan, we just saw a big deal announced recently between Tilray and Hexo. It's $56 million. Do you expect deals within that range or higher multiples going forward?
I mean, I think if you're talking the industry generally, I think it's going to be all over the map, from small to larger type deals, whether it's public to public, private MSO to public, kind of across the board. I think we'll see the gamut this year. For us specifically, I think we're going to continue to focus on smaller bolt-on M&A. It's what we've done historically. We've had success there, focused on smaller acquisitions in near-term AU markets. I think Maryland is a perfect example of that. And we'll look to do more of the same here in the years to come.